Hello, family. Today I want to show you a possible solution to reducing drawdown when using the breakout finder strategy. So let's go ahead and dive right into it. I'm on GB Chef pair right now. I'm looking at this setup. As we all know, with the breakout finder boxes, on the blue ones we look for sells, the red ones we look for buys. This current market is at a key level based on the 4-hour time frame where you have your teacup form. So you have your highs. You also have a supply zone right here. This is the last buying candle that pushed this market down. So what I'm going to do is just box up this zone from wick to body, so you can kind of see why I choose this area of interest for a possible sell. Now, a couple things can happen. The market could violate and continue to buy up, or it could react off this zone and sell down based on that daily level. On the 1 hour, we have our block box right here. Now, remember what I told you, had you got entered this zone for a sell, you would be in drawdown right now, and the most it was about 25 pips. Okay, I'm currently not in this trade. My alert did just go off to let me know that the market is back into the zone. Now, the zone that I had marked up was my order block zone. For example, this was so far for now the last buying candle that pushed the market up. So this is like pretty much that swing high. The market did exit out of this zone right here, and now we got like a little bit of consolidation. And so couple things, some tips and tricks that you could consider when trading or when taking entries is, how do I know that this market's ready to sell? Outside of your other confirmations where you're on the 15 minutes, you're looking for divergence, which I don't see any. So that just tells me that this trend is possibly still strong and really not ready to sell at this time. Also, I have my 50 moving average where the market is still above it. So we know there's still buyers, some buying power possibly. And then also in this order block right here, the market never closed below the signal candle. As you review my signal candle strategy, you'll know that when that market closed below the candle to the left of the swing high, then it's ready to sell. So it hasn't done either of those things yet. So that's probably one of the reasons why. That is one of the reasons why I'm not in this trade. However, there's other reasons where you could consider, when you have your zone, you can look for engulfing candles to use as price action only within this zone. So what you would do is look for a bullish engulfing where you're looking for a violation so you can take the sale. If you were looking for a buy on this setup, you will look for a bearish engulfing and trade the violation of that. And so remember, with the head and shoulder patterns, I typically trade the violations. So pretty much you'll have this setup here where you typically supposed to buy once on this right shoulder, but what'll happen is instead of buying up, okay, the market would, instead of doing A, the market will violate and close below the head, come back up. So it'll close below the head, come back up to the zone, and then sell down. So you'll get something like this second pattern, and that's what you're going to look for. Then this is where you would take, where you would have took the right shoulder up, you're going to take the trade for the sell in the opposite direction. So that's what you want to look for in the bullish engulfing setups inside that zone. So that would have been the head. Now, as you can see, I do have a bullish engulfing right here, but I have no violation, so I'm just patiently waiting. Remember, the lower the time frame, just know that the possibility you're getting faked out is more riskier. So like here, you have a bullish engulfing candle right here. And yes, this might be an inverted head and shoulder. Yes, the market had closed below it. And yes, it's back in this zone, but that doesn't mean it's ready to take, it's ready to sell. Like, you just can't go off of one confirmation when you're taking trades. So what I recommend you back test, and this is what I want to do this weekend, is to work on identifying your order block. Okay, because remember, you can have two situations with the order block. It could go like this, which is your normal sell, a normal M, or it could push past this left shoulder, that's what it's supposed to be, create a head, and then come back down for a sell. So one or two things can happen with this order block. I'm going to patiently wait and see if it closes below this green zone, which is my signal candle, or if it pushes up. I am going to set an alert at the top of this, and my alert would say once the once it crosses up and it closes on the 1 hour, check for head, spike, or rally, and wait for 100% for sell. So pretty much I'm checking for a rally. I'm going to wait till the market come back down to this left shoulder and then sell. Now, if it continues up and up and up, then obviously I will not be taking a sell in this particular case, and especially if I don't see any divergence on my 15-minute time frame. I hope I was able to explain this as clearly as possible. If not, please drop some comments and questions in the chat, and I will go over whatever it is that I did not explain clearly. I hope you guys have a happy trading week. God bless. Love you guys. Take care. Stay tuned to the next one.